traders. Today is Tuesday, January 19th, around 8:45 a.m. Central Standard Time. Right now, what we are about to go over is Stock Trader Week, which is our weekly recap on what happened last week. Typically, we release these on Monday, but as you all know, yesterday was MLK, and today is an active trading day, which yesterday the markets were closed. So, upward price momentum continued for most of our stocks, with many of them rising more than last week than any other prior week, increasing our already significant gains. So just a little backstory, we've been obviously tracking our results for the last year, and things have been very good despite some, obvious pandemic issues. So overall, our stocks have been performing very well, and so this could be a result of institutional investor optimism over the new administration's proposed virus relief bill that increases stimulus payments to businesses and individuals. Or it could just possibly be a FOMO, fear of missing out reaction by amateur investors. So whatever you do, don't go over to those Wall Street Bets people on Reddit and follow unless you like to gamble. So just now buying the same stocks institutional investors and us bought many weeks ago. So that's why we're seeing that uptick. Enthusiasm for stocks may quickly wane. However, once investors fully digest the proposed virus relief bill as proposed by the incoming administration, not surprisingly, it is full of what you would expect: unrelated opportunistic tax and spend measures that are debt-raising, inflationary, and a risk to employment levels. If passed, it could trigger the end of the current rally. So these are just our insights into what possibly could or couldn't happen. Another immediate concern for investors is whether the new administration on Wednesday will orchestrate an inauguration spectacle as a guise to peruse increased legislative and governmental control over individuals and their business. In the meantime, we are enjoying enormous returns, 2020 results alone amounting to several years' worth of typical stock market gains. If you subscribers were close out current positions and take the rest of the year off, you would still have a historically exceptional annual return. So if you basically close the books today from when you started last year, then you would be up way further and faster than you would have done buying and holding or going another route. But of course, we will remain involved, and unlike passive investors, will garner additional profits when a downtrend forms. So essentially what that means is what we do is we follow those stock trends. If they're going up, that's great. If they're going down, there's a way to capitalize on that as well. We follow the movement of stocks, and we try to capitalize on the ups and down ticking of those performers. Our philosophy is that we want to follow the smart money, the institutional investors, and essentially kind of mimic what they're doing so that we can stay ahead of the trends before they hit and possibly ruin a portfolio. So Stock Trader Weekly is a weekly newsletter that we provide our subscribers with insights into which stocks and when to purchase them. We provide a weekly newsletter typically that comes out on Sunday evening for the week prior so that you can digest what we've sent and also provide you with insights on when and what to trade based off of our picks. Our level 1 is our intro list, which has fewer stocks, and our level 3, which is our premium subscription level, which has a much wider selection of stocks to pick from depending on what you want to invest in. You can invest in all of them or just one of them. So head on over to stocktraderadvisory.com to get your free newsletter sample so you can see and understand how it is. If for whatever reason you have any questions, feel free to message us here through this channel, or you can send us an email at info@stocktraderadvisory.com. Good luck today and happy trading.